There's no stopping the mid-cap rally, now up 1% plus 1.04 to be precise. And the advanced decline is a very healthy, almost 4 stocks in the green for 1 in the red. So it's an extremely healthy market at this point in time. And of course, all kinds of stocks are running up, but it's a very decent rally. We've already been discussing that we've seen a fairly good rally in the NBFC stocks, and that's not getting shared by the big banks, but otherwise PSU banks not having a bad day at all. I mean, it's not an outstanding day, but it's not a bad day at all. Banks like Equitas, Lakshmi Vilas and all doing very well. That's the small private sector banks.
You know, some of these consumption stocks are coming back on the investors' radar. So Symphony, for example, if you just pull up the chart, it's up 8% today and it's already up about 20% this year. I agree that it's had a very volatile past, but this year has been good for some of these consumption names like Symphony, etc. Edelweiss Financial is up almost about 4%. So NBFCs are making a bit of a comeback this morning. And some
Actually,
of these metal names as well.
I mean, if you notice, Talwalkar Lifestyle is up about 5.25% at this point in time. Shankara Bilcon had been putting a bottom. I don't know if this is for real, but that stock had gotten pulverized. But over the past couple of weeks, it has been seeing a little bit of, kind of bottom put on that stock. And other stocks, SAIL we already discussed. And of course, the HPBP twins are having a good morning. We'll do one thing before we get the automobile dealers. Let's surprise you of what the brokerages are thinking about markets. There are some buys and sells coming from the top-notch brokers. Sonal Butra has a list of those stocks. Sonal.
Thanks a lot for that. And you spoke about the auto dealers. So a lot of brokerages have written on the auto stocks. Starting with Tata Motors, Nomura has written on Tata Motors. They maintain a neutral call with a target price of 187 rupees per share. They are factoring in a 12% decline in global wholesales for JLR in the month of February. And they are factoring a 10% decline in overall JLR volumes in FY19. So the outlook is not very positive as far as JLR volumes are concerned. Citi has written on Eicher Motors. In fact, they've cut the EPS estimates by around 2 to 3%. They've also cut the target price to 24,700 from 25,200, and they do not see any further recovery going forth. Deutsche Bank has written on the two-wheeler space. They say that the growth remains subdued because of a strong base. The motorcycle segment that outperformed. They have a buy call on Hero MotoCorp and hold on TVS, Bajaj Auto and Eicher Motors. Morgan Stanley has written on Coal India. Remember, Coal India reported the offtake and the production numbers. So they have an overweight rating with a target price of 268 rupees per share. They think that the imports should now moderate. However, the production number and the offtake number did look good in the month of February. Macquarie has written on Nestle. They are building in a 15% revenue growth for calendar year 19 versus street expectation of 13% growth. And they're also building in 100 basis points margin expansion. That is it. Those are the brokerage views for today.
Right.
Back to you.
Sonal, thanks a lot for that. In fact, we'll take that discussion forward. You spoke about how a lot of brokerages are a bit concerned about the auto sales for the month. Two-wheeler sales have continued to disappoint in February, while volumes across other key segments also remain flat or have declined. Manish Singhania, who is the managing partner of Rallis Motors and the honorary secretary of the FADA, the Federation for Automotive Dealers, joins us now to talk about that. Manish, hi, good morning. The biggest concern, I guess, is dealer inventory levels are quite high, especially in the two-wheeler space. People are talking about 45 days, 50 days. What's actually happening on the ground, and how long do you think it would take before some recovery comes through?
As a dealer community, if you see, we are really worried a lot right now. And what figures you are seeing for two-wheeler inventory, it's not actually that. The inventory has gone up to more than 2 months. And in some geographies, it is reported to be around 75 days. And passenger vehicle stocks, that the inventory is now up to minimum 50 days that we can say. Commercial vehicles, paid up stock has increased to 45 days. So whatever correction that we had in the month of December and in January, that is gone, totally gone.
Okay, but Manish, good morning. Thanks for joining. Are you speaking about a national average, or are these the worst pockets? And if you can give us some geography color.
Yeah, I cannot give you a detailed geographical, but some geographical, we have a retail group where all pan-India dealers report their paid-up stock. So in some geographies, two-wheelers definitely is a very big worry point. 75 days in some geographies, you can see the paid-up stock going.
Okay. So what would the average? The average wouldn't be as bad as 75, you think?
For passenger vehicle, average would be 45 days. Two-wheelers, minimum 2 months. Commercial vehicles, 45 days.
And what about discounts, Manish? Are they still as high as they were about a few months ago? And which are the pockets where you're seeing the highest amount of discounts now? Two-wheelers, passenger vehicles?
See, discounts are directly related to the retails. As the retails are slowing down, we are not seeing the retails happening. Overall, this month, we see a registration degrowth of more than 10% this month. Final figures are yet to come out. So as the retails go down, definitely the discounts and the panic to retail the vehicles goes up in the dealers. Nobody wants such a high paid-up stock in their inventory. Everybody pushes the stock in the market at any cost so that he can recycle the money in the system.
Absolutely. Manish, what do you think ails demand? Is it that you're not getting easy loans? Is it an NBFC issue?
Yeah, actually it's a combination of a lot of things that is coming into the play. The slowdown definitely we can see in the automotive market, plus the NBFC issues where a lot of support was there from NBFC that has completely turned around, and we cannot see the kind of support that we used to get in rural market and such kind of things, and NBFC interest rates have gone up. And the ever-increasing cost of vehicles in terms of high insurance premium, all these are taking a toll in a combined scenario, and it is hitting our retail.
But do you need loans for two-wheelers? Did a lot of people buy two-wheelers on loans? I can understand for cars. I guess everyone buys on a car loan. But do you need the NBFC even for two-wheelers?
Yeah, but see, if an average two-wheeler costs 45,000 rupees, and the starting point may not be so attractive towards taking loan, but definitely the input cost, buying cost going up in terms of insurance, that has definitely hindered the two-wheeler space.
Sure. Can you throw some color on what's happening with market share? Because, you know, we understand that, especially in the two-wheeler space, a lot of these players like Hero is losing market share to Honda. What is happening and what are the trends looking like?
See, market space, you can see the wholesale figure that has come in, except for a couple of manufacturers, whether it is a two-wheeler or a passenger vehicle, except for a couple of manufacturers, all have degrown. So that shows that whenever there's a degrowth, there's a hit in market share. Detailed market share, we don't have it right now. Maybe a couple of days more, and we would be able to give you a detailed market share where, in terms of retail, where the market share is going. But degrowth is definitely there, and dealers are on a kind of suffering with the high paid-up stock, and we need manufacturers to take a call on the paid-up stock levels, and so that the dealer gets eased out in this time of crisis.
Okay. Manish, can you give us some color in terms of whether the pain is more in rural, in urban or semi-urban?
Yeah, I think the pain is more in urban and semi-urban. Rural market still continues to perform a bit, and with so much money coming to the farmers in various states, lot of loan waivers, lot of direct compensation to the farmers, that has benefited the tractor industry and two-wheeler industry in the rural area. So the pain is more towards where, you know, parking spaces and cab operators are there. There, the people inclination to buy a personal vehicle has gone down.
Has the trend fallen, registrations degrown for these cab operators as well, the likes of Uber, Ola, etc.?
Yeah, for this month, I don't have the exact data. I won't be able to comment on it. But overall registration figures have definitely gone down, and it would be in double figures, that's for sure. Degrowth would be in double figures, that's for sure.
Okay. All right, Manish, I know it's a bleak scenario. Thank you very much indeed for joining us. We do hope the months to come will be better. We have to take a break, but thereafter we're going to touch base with our reporter who was with the Commerce Secretary during the briefing, Ritupurna Bhuyan, to tell us what are the key takeaways from the Commerce Secretary's brief.